think that's the shortest walk I've ever had to stand up to speak at a conference. Just to very briefly introduce myself, I'm Director of Policy at an organisation called EF. We represent around about 6,000 manufacturers in this country, and we do basically two things. We represent their interest to a range of different government departments and also to the European Union, which we've just been talking about, and we also provide a range of services to our member companies to help them deal with legislation from government and improve their businesses. I know there's a couple of people here that I've spoken to already this morning who are members of EF, and if you're a manufacturer operating in this country, you should very much think about doing that as well. Right, that's the sales plug over. What I'm going to talk about are two things. Very briefly, I'm going to talk about the economic situation, how it's affecting investment. I'm not going to spend very long on that. I think it's very familiar to all of you, and it's obviously not particularly positive. What I want to spend most of the time talking about is the fact that it's the new research that we're going to be publishing fairly soon on investment in UK manufacturing. What are the factors that are driving manufacturers to invest? What are they trying to do? What's holding them back? And what can be done about it? Tony's just stolen one of the things I was going to be saying at the start of this talk, which was that there are a lot of parallels with the 1930s in terms of innovation, and I think that's a very good parallel to make, because although things are, in terms of the economic situation, fairly depressing at the moment, there are a massive amount of investment opportunities out there, and from all the conversations we're having with manufacturers, they're very much geared up to take advantage of them. I think if you look across the world, some of the things that are really going to be driving investment over the next decade and beyond that, I think the environmental pressures in terms of big opportunities to develop low carbon products and services, but also for a lot of companies, a lot of investment they're going to need to do to become more energy efficient, use raw materials more efficiently, and generally improve their practices. I think there are big opportunities looking to the future in something people have been talking about for a while, mass customization. This idea that even larger corporations producing big volumes of manufacturing can actually design things with a huge amount of variations that customize what they offer very much in line with what the customer's looking for. It's been a pipe dream for a long time, but I think now with things like 3D printing, additive manufacturing coming along, these things are becoming more of a possibility. I think at the same time what we are seeing with developments in technology, particularly developments in information communications technology, is it's much easier for manufacturers to invest in a range of locations around the world. Now that obviously is a positive in some factors in terms of it allows a lot of manufacturers to do some things close to their customers, but it also means as a country like the UK, we have to work ever harder to make sure we've got the right environment for manufacturers to choose here rather than a range of other locations. I think the other final point I would make is that investment has become a lot more complex. I think if you look at a lot of the sort of new technologies that are developing, smartphones, flat screen TVs and things like that, they use a much greater range of different technologies and scientific disciplines, and this means that for a lot of manufacturers you do need to invest significantly more, but also it requires a lot more collaboration between different companies, their suppliers and sometimes their customers, because no one company can do it on their own. So I think the overall picture that I want to talk about in terms of UK manufacturing is probably, if you compare us to a lot of our competitors, we've not invested as much as them in the past. I think that is starting to change. It has to change if UK manufacturing is to be successful. Right, very quick introduction. Need to move on there. I think this is just the one slide that's really looking at economic data and the economic situation. We do a survey of our members every 3 months, and we ask them some very simple questions about what's happened in the last 3 months and what they expect to happen in the next 3. And we show these as balances, so it's very simply the difference between those that are saying things are up and those that say that things are down. So very simply, if the bars are below the 0 line there, it means that more companies are reporting that things haven't been good in the next 3 months, or that they're feeling pessimistic. I think really I just want to make a couple of points from this slide. I think the first thing is that contrary to a lot of what people say, if we look at the period back to, in this case, 2005, so over a 7 or 8 year period there, for the majority of the period, manufacturing has been growing. More companies have been reporting output and orders have been expanding rather than contracting. There is this common perception that manufacturing in the UK is an industry in decline. It's simply not true. However, we do have to acknowledge the fact that there was obviously a very sharp decline, 2008-9, the very serious recession we all know that we went through, but we did start to recover from. What was encouraging, I think, for the years 2010, summer 2011, was we were starting to see some significant growth. Certainly in this country, manufacturing was driving a quarter of the growth in our economy. Investment was starting to pick up. We were also starting to see our investment exports expand significantly. So over the last 2 years, our exports, the volume of our exports has grown by 25%. So it has been a picture of growth. Inevitably though, things have slowed down more recently. We can see these lines are just above zero now. Certainly I think our expectation for the majority of next year is that growth will continue to be slow. The things that our members are talking about to us that they're concerned about is obviously the ongoing crisis in the Eurozone. And I think our expectation is that we won't necessarily see anything catastrophic happen over the next 12 months, although there are still significant risks there, but it will continue to be a very slow resolution to the deep-rooted problems that are there. We certainly don't expect most of Europe to be a source of growth next year. I think the other things that are newer in terms of things that are concerning manufacturers, one would be the slowdown in some of the emerging markets such as China, and I think also quite a lot of concern about the situation in the United States, the so-called fiscal cliff edge, where if the two parties can't come to an agreement very soon after the election there is the prospect of a significant cut in government spending and tax rises that risks putting the US economy into recession, which is the one thing we could least do without at the moment, given all the other pressures we're facing. So those are all the depressing factors. Hopefully you'll find most of the rest of the slides that I'm going to be talking about now a bit more positive. Right, I'm going to start by talking about sort of the economic data in terms of what's happening to manufacturing investment. Now, there is a general perception that is correct across the economy that if you look at the recovery in our economy since the recession ended, that business investment has been slow, that companies are sitting on large piles of cash and not investing. That is true for large parts of the economy, but what we've looked at here is what's happened to manufacturing investment since the recession ended, and that's the black line there, the period since the end of this recession. What you find there is that in previous recoveries from recession, manufacturing investment tends to be very slow to grow. If we look at what's happened in the 80s, 90s, and the start of the noughties, in each case, very gradually increasing that line. Manufacturing investment picking up very slowly. We've seen a much bigger pickup this time, and I think there's a range of factors behind that. I think companies have realised that this really is the route to competitiveness. I think a lot of companies are facing big increase in their costs, and investing is one way of offsetting them. And I think in many cases also what we found is that the recession has done quite a lot of damage to our supply chain, the smaller companies that are in the supply chain to the major manufacturers. And I think in some cases the major manufacturers have decided that they actually need to do some of this investment themselves because the supply chain is so weak. I think the other thing I would mention as a positive, and I'm not saying this is a huge wave, but maybe it's more of a trickle, we are finding an increasing number of companies that have offshored their investment to countries like China, other parts of Asia, other parts of the world. Some of this activity is coming back for a number of reasons. I think partly companies have found that the quality hasn't lived up to their expectations. In some cases the costs have been proved to be higher than they expected. But I think for some companies it's also been a case of the fact that they need to get their goods faster to market, and leaving them on a container ship coming from China and elsewhere in many cases has proved not to be viable. But if that does mean that investment's coming back, it does mean that it's now putting increasing pressure on companies to be flexible, quick and responsive to customers. So that's the positive. We'll move on to the next slide now. That's the positive picture there, that we are starting to see investment grow faster in manufacturing than in the past. But this is very much a case of what we need to do to reverse a long-term decline. I think what we've looked at here is manufacturing investment in a number of countries, the UK, US, France and Germany. I think the comparisons would hold if we compare to other big European economies as well. And I think two things come out of that as a proportion of manufacturing output, our investment has been declining over the last 10 years or so, and also that we invest less than in other countries. So this is something, if we're going to continue to be successful, improve our productivity, we need to reverse. What I'm now going to talk on to is what companies, manufacturers in this country are looking to do to try to grow, and then how this is really driving their investment. And I think this very much fits with what some of what Tony was talking about earlier, that one of the key factors that companies are really seeing in terms of driving growth is innovation. So we are looking at companies looking to launch new products in the industry they're in at the moment. I think in many cases, a lot of companies now say they're developing services as well as the product offering. These are manufacturers that are selling services into new markets. They're also innovating in their processes. A lot of, as you all know, a lot of costs have been rising over the last few years. Raw materials are becoming scarcer, so companies need to find new ways of doing things more differently. I think the other thing to draw out of that is that companies are very much focused on exporting. I think there has been a common criticism that UK manufacturers have been slow to invest in to export to some of the faster growing countries around the world, and that may have been true in the past, but I think if we look at, say, the last 3 or 4 years, our exports to China have grown by around about 150%. So from a low base, but we are now starting to make inroads into a lot of these countries. And if we talk to a range of our members, most of them are selling to at least one of the BRIC economies, Brazil, Russia, India and China. So they are now very much focused on selling to new export markets, becoming more efficient, innovating and developing a range of service offerings as well. And I guess this chart really then backs it up in terms of what we're looking here is what's really driving the decisions to invest. And I think if we look at that, one, we look at what's in the top 3, and then we look at what's the absolute top drivers. And it's again very much about developing new products, becoming more productive, really trying to repeat the experience of the last decade when we grew faster than most of the major. We improved our productivity faster than most of the major countries in the G7, and developing new technology. If we look at the really top factor there, in terms of what companies are saying was the absolute biggest driver, it is very much about developing new products. Interestingly, down at the bottom there, in terms of companies planning major investments abroad or having made major investments abroad, it is important. But it's certainly not the central factor, and certainly we do continue to see a lot of the investment focused on the UK market. What we can also see here is that companies are looking at investing across the board. So this is not just about new capital equipment. There is also an understanding now that if manufacturers are to be successful, they need to invest more in skills. I think one of the great shames of probably the last 10 or 20 years is we've neglected some things that we were good at in the past. One of the things that we did see decline was our investment in apprenticeships. We are now starting to see, with more support from government, greater attention on that, but also greater interest from manufacturers. A lot more companies looking to invest in apprenticeships. And I think we saw some of the statistics that came out yesterday, although the overall picture wasn't positive in terms of some of the less skilled apprenticeships, the growth there is slow. In terms of the higher level apprenticeships, those that are more skilled, we are starting to see that expand. Again, very much focus on investing in product design and development, research and development, so a lot of focus there on innovation. But I think also what we're finding now is a lot of manufacturers know that they can't compete just on cost grounds, so there's a lot more effort being put into investing in ways that they can differentiate themselves from their competitors. So marketing very much coming up as a key driver there, and also branding. So I think these figures would have been much lower if we'd surveyed this 5 years ago and certainly 10 years ago. There is very much a change in the emphasis in terms of the investment that's going on. That's very quickly, this is really just sort of backs up one of the other points I was making, that we are seeing, if you look at the dark purple and the light purple bars in that bar chart there, that the majority of companies are saying that over the next 2 years they're expecting to increase their training budget. So something that perhaps has been neglected a bit in the past, we are now seeing companies put more emphasis in terms of developing skills. But as I said, this investment won't necessarily always be in the UK. So we look at 4 categories here. Those companies that are investing more abroad than here, those are about the same. Those that are more UK focused, and those that focus only in the UK. And we can see there that there is a slug of companies that, if we look at the last 3 years, around a third of them invested more outside the UK than they did here. That's expected to fall slightly now to around about 3 in 10 companies. So the overall picture is 70% of manufacturers in this country are at least investing as much here as they are abroad. Now clearly, investing abroad is not always a negative factor, and the key thing which is driving companies, if they do decide to invest abroad, is the need to be close to customers. That's absolutely the top factor. Labour costs obviously always come into it as well, but certainly I think from talking to a range of manufacturers, although this is important, it isn't necessarily the be-all and end-all in a way that perhaps it was in the past. And what we do see is that other factors are becoming more important, the ability to tap into the pool of skills, quality of our infrastructure, so our transport connections, our broadband connections, and factors such as that. And also then some factors in terms of the environment to invest in this country, so whether we've got the right tax incentives, whether we're not over-regulating. So clearly the key drivers are being close to customers, costs are important, but I think a lot of the things are really now about whether companies have got the right environment to invest here, and that's what we're devoting a lot of our attention to, and I think we're glad to see these are some of the things that the government's emphasising as well. I think I can't go through this presentation without talking about finance a bit. I think you're all familiar with the fact that we've had big problems in our banking industry and access to finance in this country over the last few years. This is now getting a lot more attention. I think the government is intervening in lots of different ways and that you would never imagine it would have done in the past. But there are certainly big factors here. And I think if you look at all these blocks together, we're seeing nearly 40% of companies are saying that finance on a range of factors is affecting their ability to invest. So projects that would have gone ahead otherwise because they're viable, they're commercial, are not getting finance because companies can't get finance on the right terms from external providers, or the cost is too high, or there's a feeling that the bank doesn't understand, bank or other investors don't understand their business. These are going to be some big issues to address. I think we do need to see more competition in the banking market. We need to improve the relationship between banks and business, and we also need to become less reliant on banks and develop alternative sources of finance. My final slide, I think the final thing we asked companies was what could be done, what would really make a difference to their investment plans here. And I think there are a range of things here. I think if you take all the tax factors at the bottom there, that is clearly very important. Some of the other things I've talked about in terms of quality of skilled people are up there. But probably what is absolutely top there is about whether the government has a long-term strategy for manufacturing. And this really is two things. One, I think it's systematically looking about what are the opportunities that there are in the future in terms of new technologies, new sectors, expanding existing ones, and coming up with a plan for that. And we're glad to see that is something that the Secretary of State thinks Cable's paying more attention to. The other thing is a sense that the government is working very closely with industry, and all government departments are working closely together to create the right environment and help companies companies to grow. That's something where we think we do need to pay more attention to. But I think the overall picture I want to leave you with is, despite a difficult economic situation, companies are very much focused on investment and growth. And I think if we can put this difficult situation behind us, we will start to see more investment and innovation coming forward. Thank you very much for listening.